We had Jerome Powell go live again after the first live completely went ballistic. He did much better this time, almost ironically by not pushing hard on his agenda. When he was doing the Wall Street Journal live, he was much more aggressive, much more tense, and just pushing the agenda of the Fed not raising interest rates anytime soon. He was trying to get his point across almost too aggressively, which, as you remember, caused a major crash in the market. And I think this time he came much more prepared. He was way more relaxed. He was just standing up, chilling, and he was much more positive with his answer. Essentially, the example I was using, he was like a car salesman that doesn't really push you to buy the car. And almost in a sense, you want to get the car more if he does that. And I think the effect was, as you saw by the market, the effect was very positive because he was way more positive about it, way more relaxed. I think what ended up happening is that people have responding by not thinking he's full of shit like last time. And you saw it. The bond yields went down, stock went up. We had a major rally when he was talking. So in a way, we had JP redeem himself from last time, which is always a good thing. I mean, good for him. And what he actually said was really interesting. And he's still saying that, listen, we still have 10 million people out of work. And he's definitely saying, hey, we're not there yet again. But this time he was much more relaxed. But essentially, he was saying not so fast. And again, he was going back to the fact that he using participation in the job market, not specifically unemployment rates. So it's a much more advanced metric of basically measuring unemployment. He's basically saying we're still a long way ahead. A lot of people gained really good businesses because of the pandemic. He's definitely talking about the K-shaped recovery, right? While a lot of people gained from it, a lot of people got screwed, and they're still out of a job. And until we fix that, we're not going to be raising any interest rates. His condition was full employment, which means participation, and 2% and above inflation. Until that happens, he said we're not going to raise interest rates. And he also said that temporary spikes in inflation are not going to get him to do it. He was talking about March, April, May as being completely skewed months for inflation rates, because he's essentially saying, well, we're going to compare this to March and April and May of last year, which was the height of the pandemic. And that's why we might see very high inflation numbers for the next 2 to 3 months. But this is not real inflation and it's not sustainable. So over the course of the years, it's going to correct itself down. And he's not going to be panicking because of high inflation numbers in the next couple of months because they're based on initial pandemic months. He's definitely, he was much more positive. He said, hey, we're in a good place. The vaccine rollout is encouraging. We're getting there, we're getting better, but we're not there yet. And the reporters, surprisingly enough, were kind of disappointing because they all asked the same question. Nobody came out with anything original, and yet they all danced around the topic. Nobody asked a really tough question. It almost seems like the questions were pre-vetted. I don't know this for a fact, but it seems because all of these questions was kind of them dancing around the topic that they all wanted to know about, which is the interest rates, right? He was asked about, what's going on with raw materials, the scarcity, and will this eventually lead to inflation because the manufacturer will have to basically roll on the increase in raw materials on the customers. And he basically said, well, I don't think they'll do that, which is kind of funny to me to hear. But I mean, I think he means to say something else. He means to say that as long as it's temporary spikes in raw materials, then there's not going to be cost increases to the actual consumer, because they'll just absorb that cost if it's temporary. So he's basically saying, I think these spikes in raw material prices are temporary because of COVID, and it's more of a supply chain distraction that happened because of the pandemic, and not a systemic inflationary supply chain, raw material shortage. So he believes that there's no inflationary shortages in raw materials, but other COVID-related shortages in supply chains. I think the one question they did ask him, and it was really interesting, is when does he actually expect? Because he has models, he's just not sharing them with us. Basically, somebody asked, well, what's your model telling you when we're going to hit full participation and 2% inflation? And he said, we don't know. And they kept asking him again and again. He said, we're uncertain. We don't know. We have no idea. A lot of different ways to say, I don't know. The other question they asked him, which was also very interesting, is that um, is low interest actually leading to inflation? I mean, is it really that bad to have 0% rate of interest? And we spoke about it during the stream, right? There's a lot of opinions that kind of don't really jump into the conclusion of immediate inflation when it happens. And I think that's what JP also said. He basically said, well, this is not the first time we have a 0% interest, right? And when we had it in the past, it didn't trigger immediate bubbles. It didn't trigger immediate inflationary or hyperinflationary reactions, right? He basically saying that in this new world where we have all these trade, basically what some one of the guys who jumped on the stream actually talked about, the way we structured as our supply chain is structured. um, there's much less connection between interest rates and inflation and bubbles, more than we had in the 70s and 80s when the market was not as efficient. So it doesn't foresee a complete one-on-one correlation. um, the one thing he was asked about, which is really interesting, is will unemployment numbers will offset inflationary concerns, because unemployment is, an inhibiting factor, and will it offset? He basically answered. This is one of his best answers. He basically said, I don't think employment creates inflation, but rather salary increases create inflation. So it's basically saying if we have full employment, that does not accelerate inflation. What happens is that if you have full employment and people are getting paid more for the same job, then you start to see inflationary effects. But overall, a good conversation by JP. I think he was really on point. He was relaxed. He seemed much more relaxed in his skin, less pushy, and I think the markets responded accordingly. Definitely, this time he got the job done. He didn't shit the bed like the last time. So total redemption. Shout out to Jerome Powell, and good for him.